Good morning, everyone. Jim Fitzpatrick. Thanks so much for joining us today. On today's show, we are joined by Erin Kerrigan, the founder and managing director of Kerrigan Advisors. Thank you so much for joining us, Erin, once again. And hey, before we get into the 2024 Blue Sky report that you guys do an amazing job with, let's talk about 2025. How is 2025? I know it's a loaded question with all that's going on, but how is 2025 shaping up?
It has certainly been a very crazy year. I would
Yes.
say the only thing I could define is a little bit of whiplash this year. In that,
You think?
when I was with you at NADA, when we tried our best and got ourselves to New Orleans,
Yeah,
um, everyone was so optimistic, and just you
I
could
know.
feel in the room of
Yep.
just this is going to be an amazing year.
Yes.
Profits, as we reported, the expectation was that the profits troughed in 2024, and 25 was
Yeah.
going to be a growth year for everything.
Yeah.
And so the deal momentum likewise was very positive. And needless to say, the tariff announcement, I think, just really shocked our industry.
Yeah, it
And
did.
it certainly is. We ironically, we signed an agreement last week during the middle of the tariff announcement. So it's not to say that I think it's going to dramatically impact the buy sell market, but it will have an impact, especially for those franchises that have no US manufacturing. That is a harder case to make until everyone knows what the cost of the vehicles is going to be.
Right. Right.
So
Good
that
point.
certainly, I think, if anything, it could push things out a bit, and so that you'll see a slowdown a little bit in the summer buy sell market,
Mhm.
and then a huge pickup in the last quarter. I still expect 2025 to be another record year based on all the activity that we're working
Yeah.
on as a. I just think that it's going to be much more weighted to the second half because of the tariff turmoil that we're dealing with.
Yeah. Yeah. I'd have to agree with you, which was amazing because when you and I spoke on the convention floor there for NADA, the president had only been in office for 3 days. I mean, it was January 20th. I think you and I
That's
spoke
right.
on the 23rd or 24th, and it was like, wow. And you're right. Everybody, the entire convention center was just humming with positivity and saying, "Oh my gosh, it's going to be great!" And Trump's in office, and he's great for taxes, and the industry is on fire. And then all of a sudden, here we are, a couple of months later, and we're dealing with tariffs and what does all of this mean? So let me ask you this: to get back to your other comment about the nameplates that are not built here. I was talking to someone else in the industry this morning about this very topic. I think 70% of all Hondas are actually built in the U.S., right?
Yeah,
And
Honda's very well positioned, actually.
yeah,
And I think Toyota as well. I think Honda and Toyota's message: look, we're not going to do anything with our pricing,
yeah, yeah,
and look, even some of the OEMs that that are subject to the full 25%, assuming nothing gets negotiated lower.
yeah.
Those folks have increased their prices quite considerably, and
Yes,
probably
I know.
have quite a
That's
bit
right.
of margin
Yes,
to work with to absorb some of these
I
tariffs. So,
I agree with you.
I like to say that, if you look, the average vehicle price has gone up about 50%
Yeah,
since before the pandemic. So that's about 10% a year. So if we
that's
see
right.
a 10%, increase, that wouldn't be that shocking. Obviously, inflation's a problem, but that's how our industry's been rolling for
Yes.
the last few years. And what that also means is that 50% increase, there's margin in there. So I think that it's all going to, I think very much so, it's all going to get worked out. And I always remind everyone, look, the dealer is the in the middle, right? The dealer has to make money in selling cars. It's the OEM that's really going to struggle here.
Yeah.
The consumer only has so much room to grow.
I
I mean,
know.
there
I know.
consumer affordability is already. So if you look at the three parties, on a tariff, it's either going to be the OEM, the dealer, or the consumer. And I think it's the OEM that takes the lion's share of this,
Yeah.
because the dealer, always figures out a way, in our experience, to make money.
Yes.
And they will be successful. They always are. So
Yes.
this is, certainly a bump in the road, as we've managed through many.
That's right.
I don't think it's going to have a monumental impact, certainly long.
I talked to an automotive analyst, and he said that if you can think of 2022, which was kind of the high watermark for dealerships, they were making all kinds of profits. They were, just on fire. And yet during that year, the number was like 13.5 million vehicles that we sold. He said, so even if we sell, 4 million vehicles less because of the tariffs, it doesn't mean it's going to be bad for retailers. Do you see that as well?
I do, although I always, when people reference that, I do remind everyone that the government sent checks to almost every consumer. So we also had a huge supply-demand imbalance, and that there was tremendous demand and very limited supply. I think in this situation, I doubt that's going to happen.
Yeah.
Although, who knows, with the Trump tax cuts and the Trump's plans, perhaps people do have more capital because they're not going to be paying as high taxes. So there is so much still to be worked out. But the one thing we know for sure is that car dealers are the friction that keeps the whole industry going, and they usually come out on top. So I'm confident in that.
Last time you were on, I think it might have been actually Ryan, we talked a lot about China and its growing influence. So I'd love to get your perspective on China and where that stands today and its influence on the U.S. auto retail market. So talk to us about that, because those guys, they are all over the world except North America, right?
Right. I think that we wrote about China in our most recent Blue Sky report. We highlighted it as a trend because we really wanted to make sure all of our dealers are thinking about, even though China's not here in the U.S. in terms of selling vehicles, they are growing market share dramatically globally.
Yeah.
And that does have implications, economic implications for legacy OEMs.
Sure.
And so knowing how exposed your particular franchise is to the growth of the Chinese market, I think is an important thing to understand, because we're a global economy, we're a global auto industry as well.
That's right.
I mean, one thing to look at is with China is effectively kicking out legacy OEMs from their marketplace. And the OEMs that have the most exposure to seeing their market share shrink in China are VW, General Motors, Nissan, BMW, and Mercedes. And so, that's important to keep in mind, because that's impacting those companies' balance sheets, those companies' ability to invest, because they're seeing a huge shrinking. Now, the positive thing is, I think once these tariffs get worked out, we're going to look like a much better place to do business, because we're not kicking anyone out. We're going to negotiate a fair tariff regime, and everyone's welcome, except for the one bad actor in this whole thing, which is, of course, China. So I do think that we ultimately are going to be very successful as a country, and our auto retail market will thrive. I just want to make sure everyone in our industry is keeping a little bit of an eye what's happening beyond our borders, because it does have an implication for these OEMs' balance sheets.
Yeah, for sure. And they're building a heck of a car. I mean, the BYD and the other vehicles are very impressive, for sure.
They are, and they're growing huge market share. I mean, just on our border in Mexico, they are
that's right,
selling a lot of BYDs. So
it
is important to understand that that market share is being taken from a legacy OEM, and just keeping track of your OEMs that you're representing as a dealer to see how they're being impacted by the really a cataclysmic shift in the global auto industry.
That's right.
China is taking big share. Outside the US.
And can't you see some of the OEMs out there, especially the ones that are taking the big hits around the world, partnering with China to build, their engines, or to go in on a co-op of a particular model or a brand or something like that, to kind of come in and get the best of both worlds, right? Where it's an Audi, but maybe it's built, by.
I might have said that about 4 weeks ago, but I do not think that now.
Good point.
I think that
Good
that
point.
the current administration would make that a potentially very punitive decision.
So it's a good point.
I don't know how much of that is going to go on, frankly.
Well, let's talk about your just published 2024 Blue Sky report. I know a lot of dealers are always anxious to read that and get a hold of it. So what were the results?
So, it is always impressive that we did see once again a record number of franchises sold.
Wow.
We had 435 transactions. So that is also a record. So it's really 2024 was yet again another busy year for buy sells and consolidation, and we were proud to start off the year with the largest transaction in during the year, which was the sale of the Leith Automotive Group, not far from you, in Raleigh,
That's right.
North Carolina. We represented Leith in their sale of 30 dealerships to Holman. That's the largest private transaction ever completed in the industry. So
Wow.
kudos to Holman for absorbing that many franchises in a single deal. And and I think that transaction is quite indicative of the whole year's buy sell market. It was a very busy year, and I think especially once the election was done, you just saw so much excitement in the industry.
Yeah. Boy, that's for sure. Which markets are on top of mind for buyers right now? Pretty much the same, the whole Smile Belt, or not so much? I mean, look at Leith. That's not in Florida or Texas.
Yeah, no, the Carolinas are high demand. Our firm's very active right now in the Carolinas. Interestingly, the southern markets were the largest market. Majority of the transactions in 2024 were in the broad southern market. So not the whole Smile, it kind of stopped. We actually saw a decline in activity in the north, or share in Northeast and in the Midwest, and then the West was sort of normalized, but the South was very, very active, and buyers continue to look to where the population growth is, and that is in those business-friendly southern states that we continue to see population grow. They are easy to operate and run, and the wind's at your back if you're a dealer in those markets. Even if we go through an economic recession, if people are moving to if you have new bodies moving into your market,
that's right.
It lifts the boat of the entire industry in that market. So that is why we continue to see, I think, so much demand for the southern part of the U.S. I mean, Arizona, obviously, also high demand, not that many stores there. Nevada is a strong demand. California is still one of those, it's you either will go to California, you won't go to California.
Right.
I will say the CARB situation this year it's going to start having an impact, where 2026 models are subject to a pretty strict percentage that the OEM can sell that is non-EV.
Right.
And so we'll see what happens. That's obviously one of the things the Trump administration is trying to tackle, and certainly would be good for California dealers if they were successful in doing that.
That's right. That's right. And it doesn't hurt with states like Texas and Florida that do not have a state income tax. If you're a New Jersey or New York dealer and you're pulling money out of your dealerships, it's going to cost you quite a different number, right?
And Nevada,
same thing.
I think Tennessee too. So those states that don't have state income tax are very, very attractive to both people leaving the high tax states and also to dealers. So
that's right.
And I will say, we didn't talk about valuation. I mean, we really do think 2024 was the trough on valuation. Valuations come down about 20% from their peak, the peak. still about double from
Okay.
pre-COVID. This is on average, not every franchise.
Yeah.
We do think as an industry, valuations are going to start going up again in 2025,
Hmm.
even with the tariff situation. And that this is going to get worked out. We're quite
Yeah.
confident.
Yeah.
I think by the end of 25, valuations will be up relative to 24
Yeah.
on average in the industry because profits are going to be up. I mean, just look what happened in March. I can't tell you the number of dealers I've talked to that said March was their best March
I
ever.
know. I heard the same thing.
And it's indicative of the demand that's out there.
Yep.
And I do think that this year will be a very strong year for dealership earnings.
Yeah.
And I do think that valuations will start to once again climb. They're not going to skyrocket, but I think they will start to climb, which I think is one of the reasons the activity is so busy. Is valuations are strong, and there's still a lot of capital out there looking to consolidate. Because the dealers that have just said we're all in, they want to keep growing.
Yeah.
So I that's one of the reasons.
Yeah, for sure. And I thought it was interesting in March. You know, even though the tariffs were pending and it affected stock markets and things, and 401k accounts, you still had the buyers come out in a very big way for new cars, even with higher interest rates, even with gas prices that really haven't changed all that much. So I thought that was interesting that it seemed like there was this hidden little trough of customers out there that said, oh, we're ready to buy a car. And you're like, oh, well, I thought everybody's 401k was hurting and we didn't know what was what.
That's right. In the Blue Sky Report, we talk about the fact that there is still probably about 12 million units that pent up demand in this industry.
Yeah.
You look at it, we for so many years during COVID period, we were so far below the pre-COVID average of about 16, 17 million SARs. So it comes to roughly 12 million of pent up demand. And I thought March just further validated that analysis. Is look, the cars are really old and people have kept them for too long, and people are going to need to buy cars, not to mention just with the hybrid technology and gas prices are still pretty high. So it's very attractive to buy a car with better gas mileage. And I think that's been the driver as well.
Yeah, of course, of course. Who are the buyers today? Are the publics back in a big way? Have you found that to be the case where they're you've got your AutoNations and your Lithias and the others out there buying these stores? Or talk to me about that.
So the publics were not very active last year. We represented most of the deals that they actually closed on. Actually, they weren't very active. The top 150 dealership private groups saw their share of the buy sell market increase considerably. I mean, they were as high as we've ever seen them in terms of market share in the buy sell market. Now, the Leaf transaction had something to do with that because that was 30 franchises, but nonetheless, the top 150 private groups have leaned in, and they're not subject to the vicissitudes of the public markets and the valuations, where the public companies, they are held accountable to, okay, your stock price is this and your multiple is this based on your stock price. Are you going to go buy something at a higher multiple than you trade at as a public company? No, you go and buy more of your stock. So they have this outside issue they have to manage as a public company.
Yeah, their hands are kind of tied, even though they see it, as a
great opportunity that might make strategic sense, but sometimes they're just like, we can't come to terms on valuation. Private companies they have these long-term horizons, they have family generational horizons. And so they were very, very active. Going into this year, the publics many of them were hitting all-time high stock prices. So we presumed this was going to be a very big year for public. You of course heard the Herb Chambers deal. Huge deal.
Huge deal.
Another Coons-sized deal that Asbury's doing. So that's one big deal. And that actually will place already 2025 at basically near where 2024 was in terms of public acquisition spending. So I do think it's going to be higher because all the public still say they want to grow, they want to buy.
Right.
And it's just a matter of their stock price. Now they're down. The Kerrigan index is down about 15% year to date. And we'll see. I think it's all going to hinge on how long it takes to negotiate these tariffs and what happens.
Hey, before I let you leave, there was a recent article in Automotive News highlighting Kerrigan Advisors projections as it relates to industry consolidation. How many dealers do you expect there to be by 2050, which is just really 25 years away? And I know I just said 25 years, but I can remember the last 25 years like it was yesterday. So, but what does that look like from your perspective?
So, we actually went back and did the analysis when they asked us this question. I had already done the analysis for a presentation I gave. And so if you look at it, there were 40,000 dealers in the 1930s, and that dropped to 20,000 in the 80s. Mm-hmm. And then we got to about 8,000. We're about 8,000 now. Mm-hmm. So in the next 20 years, my guess is we're at 6,000 and change, maybe. Okay. We're definitely we've been consolidating. I always like to say, since the dawn of the Model T, we've been consolidating. So we are. Right. This is not a new trend. It's certainly continuing. I mean, the one thing we've tracked is the top 150 dealership groups. They are now at 30% market share of all industry revenue.
Okay.
In the new car space.
Okay.
They've gained about 1% a year since COVID.
Okay.
So that would presume that in 20 years they're at 50% market share. I do think that's somewhat of a tipping point.
Yeah.
That once that we've gotten to a consolidation level where 150 dealers represent the majority of sales, I think you're going to see some more sea changes in the industry, but that's in a long time. So I'm not holding my breath or worrying about that, but it is something we're looking at. And
sure, of the 8,000 dealers currently, how many are what do the publics represent of that number?
The publics the publics are 6 dealers of the 8,000.
Right.
And they have roughly 8% of the rooftops and 10% of the revenue.
Okay. Okay.
So they have a disproportionate amount of revenue because they have higher volume stores.
Right. Right. That's been kind of their strategy over the years, is to go with the 400 car a month dealership versus the 100 car a month dealership.
Yes. Yeah. And if you look at, actually, we did an analysis in this Blue Sky report that shows the average NADA revenue per dealership and the average top 150 revenue per dealership.
Okay.
And that delta has been growing every single year.
It has.
So
okay.
NADA has been pretty flat. It's around 73 million in revenue.
Okay. Hasn't
changed much. The top 150 keep growing the revenue per rooftop.
Okay.
And they're closer to 85 million. So a pretty big delta between the two. And that continues to rise because the top 150 just want high volume stores. They're not looking for, if they buy a group, they want market share, but they also want the highest volume stores.
Right.
So those are getting consolidated more quickly than the rest of the market.
Is there still a future for and I say mom and pop, but I mean the one store, dealer that says, hey, I have a Chevy store, or I have a Buick GMC store, and I've had it for the last 40 years, and will they be okay in the next 25 years?
100%. There's just going to be different markets. What will happen is those folks that have that single store, it'll be harder in a metro. Yeah. But if it's outside metro, I think those will exist for a long, long time. Yeah. I do. I will, share with you, one of the examples is the deals that we've been working on recently. We sold the second highest volume Kia dealership in the country, Kia of Cerritos. And, it was a private dealer group that bought that Trophy Automotive Group from the Saab family. The Saab family is based in Georgia. They didn't want to
Yeah.
own a store in California anymore, so they divested of it. Again, that's private to private.
Yep.
So we're going to continue to see these kind of, I think actually that transaction is very indicative of, you want to own, we do find dealers really growing in their backyard. It is very valuable to own, to have synergies of geography, and that transaction is indicative of that. And actually, the other transaction we work for on behalf of the Friedkin family, which is, of course, the
Gulf States Toyota.
Gulf States Toyota family, they owned a Toyota store outside of the Great South in outside of Pittsburgh. So they hired us to sell that Toyota store, and that makes sense too, because they're saying, you know, we don't need, this is really far afield from our headquarters.
Yeah, seems like a conflict anyway.
Well,
that's a whole nother, probably good.
It's outside of their distributorship, so I don't think that is.
Right. You're right. But and you know, there's something to be said for the dealer that sells a couple of hundred cars a month and has a nice, you know, bottom line, and it's a family-run operation. And it's also, because it only sells a couple hundred cars a month, it's also the repellent against, you know, the big conglomerates out there that even want that store, right?
That's right.
Because of the volume.
Yeah, that's right. And I mean, I you know, this morning I had a call with one of the largest private equity firms in the country, and you know, I have these calls often, but they're like, okay, so we want to get in the car business. How do we do this? You know, we want to know. And I was just like, yeah, no, you're not gonna be able to get in the car business. They were very sad. I mean, I said, look, this maybe, probably not. No one wants, you know, no dealer wants to sell a minority stake and have this, you know, Wall Street partner.
Yeah.
And you know, the OEMs aren't going to approve you. So, you know, I do think there are structural parts of our industry that keep it the way it is, which is wonderful, that enable families to own businesses for a very long time and pass them on to their children and provide for their community. And I just think that's very structural in our industry, and it's going to go on for a long time. Yes,
I agree. Erin Kerrigan, founder and managing director at Kerrigan Advisors. Thank you so much for stopping by CBT News. It's always a pleasure getting the update from you, and especially on the 2024 Blue Sky Report, which, by the way, we will make available to you right underneath this video that you're watching. So thank you so much. Say hello to Ryan for me, and till next time, be well.
Thanks so much.
All right.
Bye, Jim.
Thanks.